We're joined now by Jim Bullard, former St. Louis Fed president, and Dr. Seymour Allen, dean of the Mitch Daniels School of Business at Purdue University. Jim, it is always great to see you. So, Fed leaves interest rates unchanged, Jim. Economy, they say, is solid, maybe sounding a bit more cautious, though, on inflation. Your take, Jim?
Yeah, I think this was exactly what markets were expecting, and I do think they updated just slightly to the most recent data with some changes in the statement, but really not too much going on here. I think they telegraphed for the last 90 days or so that the pace of cuts was probably going to slow down, and that's exactly what's happening here.
Jim, we had a bit of a switch in the FOMC this year as of 2025 here. So we have some new Fed presidents who are going to be voting, including Austin Goolsbee, Susan Collins, Alberto Musalem, and Jeffrey Schmid. Any kind of change, do you think, behind closed doors as a result of that? You know, I mean, this is a routine change, but just curious what your take on that is.
Yeah, I don't know. I've always felt that the voting didn't matter all that much. After you meet for a day and a half, you kind of throw in the towel and say, I'll go with the team here. I think there wasn't a lot to argue about here, probably. Right. So this is a case where it was relatively easy. Sometimes you do get these, points in time where you really do have a case to make on both sides, and you will get a couple of dissents that way. But it's a pretty collegial organization.
Jim, I know it's a bit maybe Monday morning quarterback, but I'm still interested to get your take. I'm curious. The Fed slashing its policy rate by 100 basis points, Jim, in that 3-month period starting in September. Was that the right call? Was it an overreaction? What's your take?
I think it was the right call. They had to recalibrate because they hit the peak policy rate in the summer of 2023. And right after that, inflation came down dramatically. Core PC inflation down, more than 200 basis points. That's a lot in that world. And so they had to recalibrate to a lower number for the policy rate, but it got jumbled up with other concerns about the labor market in July and August, which later turned out to be a little bit of a false signal. So it was a complicated communications pattern there, but nevertheless, I think it was the right move. And I actually think the committee's in great shape right now with where the policy rate is. They can be patient, let the inflation continue to come down, and then they've still got a couple of rate cuts in their pocket if they want to use them.
Jim, do you think, first of all, do you think that we are going to get any rate cuts this year? And what do you think is the probability, if there is any, of a potential rate hike?
Yeah, I don't think you'll get any cuts if inflation is sticky where it is right now. So if you continue to get 12-month core PC at 2.8%, and that goes on for another 6 months, I don't think the committee will be too happy about that. But the good news is what they can do in that circumstance is just keep the policy rate where it is and not do anything, because I think they're a little bit higher than it probably have to be for that amount of inflation. So they're in pretty good shape here. Would they raise the policy rate? Maybe. And there's a little bit of probability in financial markets on that scenario, but that would require inflation to core PC inflation to go sustainably higher. And then I think they might decide that they're not restrictive enough. But I think that's a fairly remote possibility right now, not the base case.
Jim, what is the neutral rate, the policy setting that neither stimulates nor restricts the economy for you, Jim? I mean, is it with 2, 3, 3.5? Where are you?
Well, the committee says it's 3.
And what do you think, Jim?
Still agreeing with that, Jim?
Yeah, but I think it's got a wide range around it, and you can see that in the dot plot, and that's fine. But they're definitely on the high side of even the highest of those. But I think the thing is, even if you think it's 3%, you probably need another 100 basis points at least to be sure that you're bringing inflation back down to target. So that puts you at 4% as where they should be right now, and they're definitely above that. So that's why I think there's a lot of agreement around the table that they're probably in pretty good shape now, and they can gradually reduce inflation this year. Real economy's been doing great. Labor markets are doing great, so they don't have to worry about that side right now.
As one strategist said ahead of this, no surprises is the goal of the Fed here. So we'll see if the presser meets that standard as well. Jim Bullard, thank you so much. Really appreciate your time.
Thanks a lot.